If you'd put £10,000 into one of the world's most popular index funds 10 years ago, how much richer would you actually be today once you strip out inflation? Everyone talks about returns. Almost nobody talks about what those returns are actually worth. Today we're settling it with real numbers. Let's start with the fund, VWRL, the Vanguard FTSE All-World UCITS ETF. Tracks over 3,600 companies across developed and emerging markets. It's basically buy the entire global stock market in one ticket. Massively popular with UK and European index investors. Here's the year-by-year total return. In GBP, dividends reinvested. 2016 saw a gain of 7.8%, while 2017 was a massive year with 24.3%. 2018 dipped by 9.7%, but 2019 bounced back with a 25.7% return. 2020 gained 16.1%, despite the volatility, and 2021 stayed strong at 18.5%. 2022 was brutal, down 18.2%, but 2023 recovered with a 22.3% jump. Closing out the decade, 2024 hit 17.7%, and 2025 finished strong at 22.4%. Notice the roller coaster, a brutal 2022, a rough 2018. But look what happens when you compound all 10 years together. Cumulative 10-year return, approximately 202%. Annualised about 11.7% per year. That means £10,000 invested at the start of 2016 would have grown to roughly £30,000 by the end of 2025. Great, except that £30,000 doesn't buy what £30,000 bought in 2016. Inflation has been quietly eating away at every one of those pounds. So let's bring in the other side of the story. Here's UK CPI inflation, year by year, over the exact same period. Inflation was low at 0.7% in 2016, rising to 2.7% and 2.5% over the next 2 years. It stayed manageable at 1.8% and 0.9% before ticking back up to 2.6% in 2021. Then came the shock, 9.1% in 2022 and 7.3% in 2023. Finally, it settled a bit at 2.5% in 2024 and 3.4% in 2025. See these 2 years. 2022 and 2023 alone account for more than half of all the inflation over the entire decade. That's the energy crisis and the post-pandemic supply shock hitting at once. The highest UK inflation in over 40 years, cumulative 10-year inflation, approximately 38%. Annualised about 3.3% per year. In plain terms, something that cost you £100 in 2016 cost about £138 by the end of 2025. So here's the head-to-head comparison between growth and rising prices. Over 10 years, VWRL returned 202%, while CPI inflation grew by 38%. To find your real and inflation-adjusted return, we don't just subtract the percentages. We divide the growth, £30,000 in future money, divided by the 38% rise in prices, leaves you with about £21,800 in today's purchasing power. Real cumulative return, approximately 118%. Real annualised return, about 8.1% per year after inflation. That's the number that actually matters. Your money didn't just grow, it more than doubled in real purchasing power. Even after living through the worst inflation spike in a generation, if you'd left that £10,000 in a savings account paying, say, 1 to 2% a year, which is roughly what most UK cash accounts paid for a chunk of this decade, you wouldn't have beaten inflation. You'd have gone backwards. Equities did the heavy lifting. Not because every year was good. 2018 and 2022 were genuinely painful, but because staying invested through the bad years let you capture the good ones. These 4 years alone added over 100 percentage points of growth. This is the core argument for long-term, diversified investing. It's not about dodging the down years. It's about not flinching during them. A few honest caveats before you go and bet the house on this. First, this is historical data. Past returns don't guarantee future ones. These are calendar year figures, and exact numbers shift depending on dates. Also, inflation measures like RPI would give slightly different results. This ignores platform fees, currency effects, and taxes, all of which would eat into your real-world number. So, beating inflation isn't about finding a magic number. It's about staying invested long enough for compounding to do the work, even through the ugly years. If you found this useful, hit subscribe. I'm breaking down real fund data like this every week. And drop a comment. What fund or index do you want me to run through this exact same real return test next?